Welcome everyone to a new ATFX video. My name is Gonzalo Canete, and yes, you are right. This is the review of the last week of the market. You probably seen this video by the beginning of the next week. It will be, let me see the future. It will be Monday 22nd of January. But at the moment when I'm recording this is 19th of January, evening, closing of Wall Street. I want to share with you the last hours of the market and also a review of what happens during the week. Let me grab my notes to share with you the most interesting events of the last day of the week. We started this morning, mentioned to you, let me share the screen. I was also published on our blog. By the way, if you are not subscribed to the blog, if you don't follow the blog, please go ATFX Connect Market Snacks. You got every single morning here the market review. Let's open the one for today. Also, I'm posting on X, on our account on X, every comment I see relevant during the day about markets. You can follow also the account here. You can also see here the publications of the reports and chart patterns, calendars, absolutely all comments I can trace during the sessions. I'm sharing with you here. All right, so please subscribe if you really like this content. Give me a thumb up. And let's go to the review of the week. So I was saying, I got my notes here. Let's take a quick view. First of all, reviewing the calendar. Yesterday evening, we got certain numbers from United States which could move the market. The numbers was jobless claim. Jobless claim was better than expected. It was 187,000 jobless claims versus 2,007 expected. What that means? Well, that means that the labor market is actually stronger than expected. So it means like the results that the labor market is still showing means that it's still a strong market and we are not expecting an increase on unemployment rate. And if that is right, if that's correct, and these numbers are actually proving the situation of the labor market in the United States, it means the Federal Reserve has no reasons to cut the interest rates dramatically and fastly. And this is very interesting because during this week, I also revealed to you on social networks, if you follow us, you already have seen this comment, but I also revealed to you one of the comments that it was changing completely the rules of the game. It was published on 16th of January. I told you here, yesterday, Waller of the Federal Reserve said, brackets, economic activity and the labor market are good in shape. Inflation is gradually coming down to 2%. I see no reason to act as quickly or cut as fast as in the past. My friends, this comment from Waller, it was actually changing completely the scenario on the market. Dollar was rising super quick after that words. It was rising, breaking up the neckline of the figure. I explained to you in previous videos that we got already two bullish patterns on dollar, that the first one of them was failing completely after Jerome Powell mentioned those words in December, suggesting that the interest rate cut could even happen the first 3 months, previous months of this year, which actually the market was discounted at interest rate cuts for March 2024. But after this comment, that expectation was flying away and completely gone. Now, how this changed the rules of the game? Well, it changed the rules of the game because since then the market was reacting really bad. On Thursday, it was actually yesterday, Wednesday and yesterday. On Thursday was actually corrections on the market. So Wednesday and Thursday was a negative day for the market. Now, keep going with the macroeconomical results from Thursday. From the United States was also Fed manufacturing in Philadelphia, which it was 10.6 points down, showing that the activity was actually getting weaker in the economical activity in that region, in Philadelphia. Atlanta was published also on Thursday, the GDP Now, the indicator that tried to predict the growth rate of the US economy, and it was giving us for the Q4 2.4% of growth rate in United States. Keep in mind that the last numbers we got, it was 4.9% of growth rate for United States. Amazing. Moving forward, Japan also was giving certain numbers on Thursday. that could actually affect the dollar yen and the second biggest market in the world after New York, which is Tokyo Nikkei, stock exchange of Nikkei. So last night, inflation rate from Japan dropped from 2.5 in November to 2.3 in December. Good news. However, bad news. The few hours previously to that release of data, it was also the release of the industrial production from Japan, dropping by minus 0.9% in December versus the 1.3% up on November, which basically bring to us a question. If the inflation is dropping in Japan, it's because the risk is gone, the economy is doing well, the production is working completely, or which means the supply of products, goods and services, or maybe it is because actually is facing a depression in consumption and retail sales. Why I'm saying this? Because if let's say the inflation is under control by decreasing the growth rate of the economy, bad signal. Because in this case we actually are going to a worse scenario. We are going to a scenario of poverty and a scenario of unemployment rate rising, which is not good. Moving to UK, retail sales dropping 3.3% in December versus the rise of 1.5% in November, and versus also the expectations. It was negative expectations for United Kingdom in terms of retail sales, but it was expectation of minus 0.6%, not 3.3%. So it was a shocking number for United Kingdom economy, and actually it's I will say that it's reactivating again those fears of a recession in United Kingdom. Germany, on the other hand, is giving us the price on production industry, price on production in PPI, dropping by 1.2% in December. It was worse than expected, but also in November was dropping by 0.5%, which means it's accelerating the drops on the prices on production. This actually is very strange phenomenon. It's happening it was happening in China last year. It happens 2 weeks ago in United States economy, was it was given a new pike on inflation, but drops on PPIs, and PPI is supposed to be a pre-indicator of inflation. If PPI is rising, it means that inflation sooner or later gonna pike. But if the PPIs are actually dropping, it means that inflation could actually turn to a deflation, which is even worse again. Inflation is not good because inflation makes us it's decreasing our purchase power, decreasing the value of our money, but deflation means like the economy is basically getting smaller and smaller. And this deflationary risk is already in China, like I say, United States 2 weeks ago, United Kingdom last week, and now Germany is showing the same symptoms. Interesting point. I also have seen, and I share with you in my private channels, I believe, but I also have seen one comment that it was so explosive. And again, from a geopolitical perspective, things are getting really crazy. Let me find for you the comment. It was here. That's the comment. So Putin says the US election were rigged. Russian President Vladimir Putin running for a next 6-year term in election that his opponents say it's a parody of democracy, say on Tuesday that the US election has been rigged by postal voting. He literally said that. You can also find the video on social network where he's saying that, and people put subtitles in English, explain that he was saying that they were paying like $10 per vote, and they were just filling out, sending by post, and nobody was checking that. This is explosive. This is incredible because actually this year, keep in mind, we got also the US elections, and Donald Trump has been mentioned this for the last 4 years, and he's actually facing legal issues, criminal charges, because he stayed in this position. And now Vladimir Putin is exactly saying the same thing. So things are getting really weird from a geopolitical perspective. Now, more comments I included here. We just finished with Germany. Now, geopolitical topics I also mentioned here on the report, and you can see also on detail through the networks. It was mainly Houthis from Yemen has attacked this morning, early this morning, again, another US ship. Also, I have seen the comments from Joe Biden, which it was also shocking, because a journalist was asking to Joe Biden yesterday if he believes that is effective or not attacks on Yemen. What exactly could the public opinion expect in the United States? And he literally replied to the journalist, well, when asked by a reporter whether the bombing in Yemen was working, President Biden replied, well, when you say working, are they stopping Houthis? No. Are they gonna continue? Yes. So with this kind of comments, my friends, we don't know who is in charge on the global stability, right? Now, more things. Separately, Kiev has claimed responsibility of attack on oil deposits in Russia. I have seen the video. It was a massive explosion. Also in Russia this morning, and apparently Kiev said they were the ones who sabotaged the oil deposits based on the AFP agency, citing Ukrainian military sources. Now, another agency also mentioned things that are getting really ugly, which is the TASS agency. TASS new agency has report citing Belarus defense minister source that the country is considering deploying nuclear weapons as a strategy determined. Please remember, this country borders 3 NATO countries in Ukraine. So it's bordering Poland, Lithuania, Estonia, and Lithuania, and also is bordering with Ukraine. So the country is mainly, well, the government of the country is studying the possibility of deploying nuclear weapons in Belarus. So Belarus is mainly the next entry of Russia. So additionally, a 2-day NATO meeting ending yesterday. Another announcement. This is again something that is getting weird. Is after a 2 days meeting, NATO announced that they're gonna make a new military exercise, mobilizing more than 90,000 troops and making the largest military exercise in decades. Call it Steadfast Defender 2024. Now, despite of all of this crazy things happening around the world, we end in the report mention commodities, and as you can see, oil prices doesn't seem to be changing a lot, which is it's strange. I mean, you can see that the whole war we have seen this week, from Monday to Tuesday, attacks from Iran to north of Iraq and north of Syria, actually close to military troops. We also have seen how United States and United Kingdom has been keep attacking Yemen coast and Houthis. Houthis announced recently, a few hours ago, that they guarantee Russia and China boats can safely cross Red Sea because they are not gonna attack them at all. And this attack is only in concern or in regard of United States and Israel partners. So things are getting crazy, but still commodity energy is not reacting. We can see that it's rising a little bit. This morning was around $79 Brent barrel. Now it's in 78.69. Nothing is changing. Even gold seems to be so calm. And it's strange because if you take a look what happens during the attacks on October to Israel, was crazy. It was jumping from $1,830, $40 to almost, in a matter of a week or 10 days, to almost 2016, and from there even jumping up to $2,140. Right now, $2,030. Nothing seems to be happening from a risk perspective because gold is not reacting. I can tell you one of the reasons why gold is not reacting is because Waller made that comments from the Federal Reserve about the interest rates and provoked that movement we mentioned early about dollar, this movement. You see? So with this movement, probably gold cannot rise too much, because if the dollar is getting strong, again, I'm telling you this, if dollar is strong, there is no reason for gold to be on your portfolio, because the value of your money is still rising. If the dollar is dropping, gold for sure gonna start to resuscitate and get stronger hour after hour. But now this is the situation right now. Let me go to 4 hours candle. As you can see, it's making a kind of lateral movement, but still we got a 2 moving average cross, and it seems to be a bullish pattern. Let's see how it's getting the blow, but it seems to be a bullish pattern. Really nice one. Euro dollar should be moving down terms, you see. So is losing mainly the whole tendency here, and probably in long term is facing a correction, moving back to the main initial level, which is 105, and from 105 even lower than that, as we see in the past. Okay, so let's keep attention to those levels. On euro dollar equity, we can also take a look how it's going on Wall Street. Look at this. Wall Street is running back again on business, and is breaking up new maximums. New maximum on on both spot and future. If we take a look also on NASDAQ, rising super strong again, and Russell 2000 super strong again. Let me take a look last news, because the last thing I have heard, it was the Federal Reserve was announced the interest rate cuts could be by May. So maybe that's the reason why I was waking up the market back again. Super bullish market. Probability of Fed rate cut in March drop below 50%. Fed won't start rate cuts until May meeting. US short-term interest. This is very strange, because actually these last comments done just like an hour ago, an hour and a half ago, all of these comments, let me share the screen with you, are actually telling us that the expectations of interest rate cuts drop to 50%. So if the people thought that Federal Reserve was about to inject new fresh money on the market by then, by cutting interest rates, release liquidity by cutting interest rates on March, the drop on those expectations actually should depress the market, not push the market up, unless they were discounting something even worse. But the reaction of the market has been really, really good, and this is it. This is all. We just need to comment also equity on Europe, and that's it. It's the standing. As you can see, the movement in Europe is completely different. So far is this. Still, if Wall Street is doing well, probably gonna pull the market back again up. Okay, I think that's all for the week. Quick review. Bitcoin, by the way, this is here. So doing really well, but right now seems to be making more support than anything else. So that's all. I hope to see you next week. I hope you like this content and you find useful these comments. If you do so, please don't forget to subscribe and give me a thumb up, just to know that you are there and you appreciate this content. Okay, take care and see you in the next reports. Bye bye.